Hey everybody, it's Pete Carmasino here at Chaikin Analytics. I'm the Chief Market Strategist, and this is the halftime show here on StockCharts TV. I hope you caught my episode last week. I was invited onto the final bar with Dave Keller. We had a great time. We talked about some of the charts that I've been kind of reviewing, more from a macro view. Looked at the dollar. We talked about bonds. We had talked about this for months here on the halftime show. So if you missed any of that, you can go back and check it out. But it's old news. So the new news is what we're going to be talking about today, and we're going to try to follow some trends and see what's happening here in the market. We're seeing some new highs here. S&P printed some new highs, had some big movers today. Palo Alto moved up nicely. I think what's going on is it's going to be replacing Dish in the S&P 500. So that's always helpful to a name. There's some other names that are kind of moving around. Some of the indexes are rebalancing and adding and subtracting some names as well. So you'll see some of that happening. 3M, the industrial manufacturer shares, they slid today after a judge basically ruled in a multi-district litigation. I guess it was over the chemicals, that whole situation that continues to plague some of these names. We've heard all about the other pesticides and lawn treatments and things of that nature. So 3M is getting caught up in a little bit of that as well. And you just got some other names kind of moving here just on earnings outlooks and some different opportunities. But overall, the market is pretty much in a bull mode. But we want to talk about some warning signs here. And, I don't know if this is the warning of the bell tolling at the top of a specific index that I used to follow pretty closely. Hadn't talked about it in a while, and I'm glad I took a look at it just recently, and I was shocked. I wasn't surprised, but I was shocked at how far it had recovered, how quickly after falling to almost pre-pandemic highs. And so we're going to look at the Fang Plus index as well. And, just kind of pull back the curtain a little bit, kind of see, are we at sort of the precipice of a situation where kind of what we witnessed in that .com bubble, and I'm not calling this a bubble, I hate to use that word, but that's what it was back in 2000. And I can't say it's the same today, but it certainly is reminiscent. And we talked about that on the final bar as well. But looking again at that index, again, that's a 10 stock index we'll go over today. And just to locate where it was, and I've got an old chart that I was using for previous shows and letters that I've written over the years. And all I do was kind of squeeze it and update it a little bit, but I didn't change any of the levels or anything of that nature. So it'd be kind of interesting to go back and look and see what unfolded and where it's at today. So let's jump in. We'll look at that. We're also going to look at some names that have turned bearish this week on the Chaikin power gauge. So let's jump in and take a look at these charts. All right, everybody, just jumping back in. I wanted to start, looking at the S&P, and this chart. I used to use this a lot, and it's kind of reminiscent. I'm going to jump between charts here so you can see my cursor. I'm going to jump between this chart and the actual index. And so I like to look at this. This is the rally chart. I've been putting this up since 2022, the beginning of 22. And I like to measure the rallies that, from the bottom to the top, at least 5% or more, calling it a rally on a weekly basis. Obviously, we're here in one now. We can just see that the bullish percent has been turning on these three indices. And the top one is the New York Composite. The middle one is the NASDAQ Composite. And the bottom is the S&P 500, but that's been choppy, right? The other, the NASDAQ obviously has been rocking and rolling. We know why, right? It's all the tech names. And again, we're going to get into the FANG index as well. But if I drill down onto the bullish percent in the S&P 500, I don't see, it's in the typical range. That's just a range that I created. It's not something that's universal. It's just my particular range between that 30 and 70, right? That's an old, way to look at things. 30s oversold, 70s overbought, so to speak. But, when you get to these levels, it creates buying opportunities. When you get to these higher levels, it creates selling opportunities. It's not automatic. And typically, it may not even coincide with what the index is doing. So you got to be careful when you use this. This is not an all-out specific indicator. It's something that you use in conjunction with other indicators, just like any other one that we look at. But, meandering here, coming off the lows in March, moving higher and kind of living around that average. Again, that's a 200-day moving average, that thin red line you see there. But again, right around 50%. So what's that telling us? That's about half of the names are looking like they have a buy signal in the bullish percent index. And so that's not horrible, but I just wanted to kind of point that out. All right, we always look at that rally chart, but I never drill down and look at the specific one, have it set up and formulated differently on a bar chart, not a line chart. So I like to look at both. The one thing that stands out is this RSI. It's continually fading. In other words, getting into lower lows and lower highs and sitting around that 50 level right now, while it's kind of producing a downward trend. So just be careful of that. To me, we know what that means. That there's less stocks moving higher. We know that the top names are moving these indexes. And that's why we're looking at this next situation here, which is the FANG index, the New York FANG index. And so, look, for the folks who don't know what that is, it represents really a set or an index of highly traded growth stocks that are really in the next generation technology. We know this, AI is one of them. You're talking about, when I say AI, I mean artificial intelligence, but you're talking about Meta, Amazon, Netflix, Google, or Alphabet, we call it now, Alibaba, Baidu, NVIDIA. We've all talked about NVIDIA now, Tesla, Twitter. These are the barometer of tech dominance, right? And so when you start to see these things change trend, right, you got to be aware of what's happening. And really kind of what we saw here was a change of dramatic change of trend. And you know what? I said I was going to bring up another chart. I must have picked up the wrong one. So bear with me. I am going to correct myself here on the fly. Nope, that wasn't it. This was it. Okay. So this was the one I had drawn. And I had a pre-pandemic high here, like 39.21 or so. We didn't quite get back to it, right? This was a downtrend line. It broke that trend line right at the beginning of this year, okay? That's a pretty strong indication that the trend was changing. Also had a higher low, and then the range was broken. Again, that downward trend line was broken on the upside. Got to that 55 EMA, kind of hung around a little bit and then broke out again. Now, look where it's at. It's at all these levels are coming into play. But think about this level hasn't been achieved really. And the first time it was achieved was back in 2021. Now, we kind of know where things were back then, and they were a lot higher, right? The S&P back in that time frame was a lot higher. So this is what kind of gives me pause about trying to chase this situation, right? We don't want to do that. And if we go back to that level of 2021, right, we're looking at like 45, 4,400. We're kind of in the same range. We're a few, 100 and some odd points away from that right now. But again, it just seems too far, too fast. So I'm just saying, be careful, right? This is one of the ones where we want to make sure that we kind of follow the signals and try to keep in step with them. The other one I want to look at was oil. We've been talking about this. We call it the White House buy zone. This is where the White House said they're going to refill the Strategic Petroleum Reserve, SPR, as the acronym is known. And I'm going to squeeze this chart a little bit so you can see it. And so this level, I gave it some standard deviation of, 5 or 6 points. It was around 70 to 72 was supposed to be the buy level. We let it stretch all the way down to 67 or so. And it's gotten there a few times. And again, this is an arbitrary setup. All right, I wasn't looking at this in any other area. I kind of saw some technical levels here, but it just coincided with what the White House said. And it seems to be holding pat. Now, over the weekend, OPEC made some changes, and they said, hey, this is what we're going to do. We're going to slow production, and oil popped here. But the funny part is it's all happening around this area. I mean, I see it. I can't be the only one. So we'll see. We'll see what that actually means going forward. Okay, jumping from oil back to yields here. Just looking at a chart that I had drawn, again, many moons ago here. And I had specific targets built, and all of them were hit except for this last one, this 4.7 to 5%. And we got very close, obviously, about 4.3 is roughly the high, and kind of meandered here now for the last several months, if not an entire year by this point. And I'm just looking at this and, in relation to bonds and what's going on, obviously, with the dollar. We talked about this many, many moons. There's correlation here, right? Rates, the dollar, and what's happening here in the markets. And when rates are sort of meandering and the Fed's talking about not raising rates as much as before, you get that headwind being lifted from tech stocks, and you saw the Fang index and everything kind of melt up, right? So now what we have to be cognizant of is what's happening here in bonds. And so you see, obviously, rates. What do we know about rates and bonds? They're inversely related. So if I go and look at the TLT, right, one of our old targets here was this level of around 97. I had that built in the middle of that green box, and I gave it a low of around 93 and a wiggle room up to 100 or so, right? So about 3 points on the upside, 4 points on the down. It went all the way down to almost below 90 or so, and it's just been stagnant back and forth, right? So what's really happening here? I mean, well, bonds are competing with stocks, and with the yield so high, they're attractive. And so sentiment is changing between how much exposure people have to equities versus a fixed income, and you've got to keep that into your line of thinking just to see what's happening. But this target is not new. This was a target I had on this last year, and I don't know if it's going to come true. I wish I knew for sure. But at the very least, that high level here that was achieved, unfortunately, back in December of 2008, was around that 82, roughly 75 to 80 range. And that's kind of where I'm at in the middle, right? So the top end of that is around 83. I'm just seeing the trend continuing and the RSI just failing and potentially rolling over here. And this is a 21-day RSI, just make note of that. And there's the rate level, right? The US 10-year rate. It's kind of flat. So as this starts to roll, rates could move higher again, and that could cause some issues and a ripple effect in the equity market. So let's jump onto the Chaikin system right now and look at some different charts. Back here at the Chaikin system, we've got our lists. I call them our secret lists. They're called our hot lists here on the Chaikin system. We've got all kinds of things going on here. We've got factor movers, earnings hot lists, signals, our ideas, our featured stocks. And this one is the Power Gauge hot list. And I wanted to look at names that turned bearish this week. And what I did was I sorted them by the price level. So I put the highest price up top. And I've got a filter on these. I'm looking for names that are more liquid and higher market cap levels. And a few names here that pull up right away are consumer staples name, Dollar General. We've seen this name in the news many, many times, but the relative strength broke down, back here in early January. Again, when tech started to roll, staples started to fall off. We saw that in the defensive sectors in general. But Dollar General, to be specific, has just turned bearish here again after falling after earnings. So just be careful of that. No one is. Burlington stores, I know it as the Burlington Coat Factory. That's what I grew up calling it. And another name here, a weak stock and a weak industry that just turned bearish after recently changing trend. Okay, everybody, that's a shorter video this week. I apologize for the late video, but I'm a little under the weather if you can't tell. But again, I'm Pete Carmasino, Chief Market Strategist here at Chaikin Analytics. Thanks for tuning into the Halftime Show. We'll see you next week. Take care.